Tuesday. Well, I just posted this in Telegram. One of the silliest days we've seen since probably April 9th when the market ripped up one of the largest single point or single day moves ever, or last Christmas when it was just all this like low drift melt up the entire day. Trades that would have literally started out at like a 0 to 5 delta are now trading at the money. We've had a one-sided move plus the gap higher. Look, we all knew this was going to happen last week, right? European tariffs, 50%. What happened over the weekend? We're going to pause for 90 days so they can negotiate. Same crap as what we did with China. Same crap what we did. It's just all a spin. But anyway, price action today is up. Let's take a look at the numbers. I'm jokingly putting this up. No pullback coming. Look, the market might be pushing all the way to the end of the month. May 30th is Friday. We have NVIDIA earnings Wednesday after the close. We have GDP for the U.S. on Thursday. We also have Core PC on Friday. So we do have some interesting data to close up the week. I'm wondering if the market is just going to do everything in its power to try to close higher. We're still in between a couple of weekly candles, which I'll talk about. So let's have a look at the big picture. I'm going to go ahead and just set some alerts here. I need price to see if it will stay below 59.20 today. Ideally, I'd love to see price stay below 59.10. I've got a chart alarm set at 59.10, a chart alarm set at 5900. I've got a chart alarm set at 59.50. So here's what's going on. I've got a lot of trades running today, which is kind of silly, but sometimes when you're backs against the wall in a 0 TT environment, I'm just trying to, make a few bucks. So I have a butterfly spread here. I have a bear call spread here. I have a bear call spread here. My bull put spread is already in full profit. That one's part of my iron condor, but I need price to still finish below 59.10. And then I also put in a iron butterfly, which is this trade down here at 5,900. So at 59.50, I have a potential profit trap. 5,900, I have a potential profit trap. These are all low risk, high rewards. Ideally, I'd like to see if price can stay below 59.20. That's where most of my risk is today, is above 59.20. So looking at this chart, here we go from the close on Friday. We are sitting here from the close Friday all the way to the highs today, up 2.1%. Now, the reason I would say, and I can honestly say this, today's price action was pretty stupid, right? And I don't know where the close is going to be in the next 51 minutes, but I would hope it's going to be below these blue lines so I can make some money today. But the reality is, if you looked at the VIX this morning, even if you looked at the VIX this morning, which is now just getting smashed lower all day, the VIX is down from the high today. VIX is down about 9.39%. Okay. Now, even at the number that we were at this morning, here's around a 21 VIX. Okay. The rule of 16 is this. If the VIX is 21, divide that by 16, that's about a 1.3% move is what's expected to be day to day on the S&P. 1.31%. Keep that in mind, because what did we just do today? What did we do today? 1.31% is the expected move. And what did we have? Well, from the close to the high today, we've already moved 2.09%. That's nearly a 2x expected move. Okay, even intraday from when price opened going up, there's still a 1.21% move. Okay, so it's pretty rare that we see, the VIX is showing us X amount, the rule of 16. It's pretty rare you'd see the market just do this all stinking day. And, even for traders looking to sell premium, like I tried to sell premium today, I wanted to see if price was going to go up and test 5,900. It did. It actually ended up going through it. So I'm hoping that we end up settling back in, to the recent level at 5,900. That would have been my biggest gamma levels on the day, something like this. So these two strikes, this is 59.20, and then we have this level down here around the 5,900. So I'm hoping we can settle in a little bit, even with some intraday price action. If we had a low to high, if we pulled back, even 23%, even 30%, anywhere in here, I'd be kind of happier to see price respond a little bit with a bit of a reversion. So the day is not done. I'm just hoping that we don't close at highs today, because then I'm taking on some risk, right? So chart alarms are set. There's 59.10. I'll take a look at my P&L. 5,900 would be great. I've got a trade in here where I put a trade in for 460 credit, and I'm risking about 40 bucks. So if price comes down towards this 49 or 5,900 level, I can turn this into a pretty nice win. If it's also below 59.20, I make $175 here, and then I make $90 below 59.10. So we'll see how the day settles, but I'm going to be here until closing bell and see if these can turn into a nice set of results. Best case scenario would be I sacrifice this 59.50 butterfly, but if it works out this way where I can pull in $1.75 plus the 90, and then maybe grab a part of that credit, the 460, then maybe I grab $100, right? So I can make 365 bucks on the day versus watching this price basically just threaten my call side and potentially lose $1,000 today. So we'll see, but that's what's going to make this close a little bit more exciting today. Which I don't really trade to get excited. I'm just trading to hopefully make a few bucks. Okay, overall, hit a fresh high in the portfolios today, so about 250K for the year. That is good. Previous high before that was 205. I broke that a few weeks ago at 220. It's just been slowly, incrementally going higher. I have embraced this melt up. I haven't gotten aggressive, though. I haven't gotten aggressive on the melt up. I did do a roll today. I talked about this in my Discord and Telegram channel. I put this in here. So I got a couple things to discuss and review. This week on Wednesday, I'm part of the panel for a roundtable at 1 p.m. Eastern time. We're talking through current environment through the end of the month, through the GDP print, core PCE, and then also, I've got a very easy way to find trades. Get ready, get set, go. That's how simple it is. Like a couple of clicks away from finding stocks that are ready to move. And I'm actually in the process of finishing up all the videos and the strategy guide for it. Taking about 10,000 plus instruments and finding, like today I did a scan. Today I found 14 actionable trades. So from 10,000 instruments that are all just ready to trade, I've got 14 that I'm willing to look at and price in today. So it makes my job a lot easier as far as finding trades. Then I go a step deeper. I find my volume parameters. I make sure there's open interest liquidity. And then I find good strategies where I'm looking to trade the market up, down, or sideways. Okay. So that's coming this week. If you want to jump into the roundtable, I'll post a link here for my Telegram channel. But you can jump into that roundtable with us on Wednesday. I'll be talking about this also on Wednesday. I've got a couple extra sessions on it, and then master classes this week. Okay. I also posted this right here. Did I post it here? That's the debit. That's the debit. Where the heck did I put it? Here it is. The SPY income collar update. So I posted this last week. And here's what I'm looking at. So I bought shares of the SPY last week around 579 ish. I bought a put for protection and I sold a call for income. Today, the sell call is at 583, which if I didn't do anything today, it could get called away at 583. And the break even was 578.30. So 578.30, get it called away for 583. I'd make $470 today if I didn't do anything. Now, what I did is I looked at the collar trade and I rolled it out to the end of the month, which is Friday. So I rolled it for $1.58. So I'm going to take the 470, so 578.30 minus $1.58. There's my new break even. Okay, 576.72 is my break even, and now my call strike is still 583. So if by the end of the week the SPY is above 583, I go from making $470 to now making $628. And what I'll probably end up doing is, if price is above 583 by the end of the week, I know we're coming into June, I fully expect there to be a pullback. I really do. But as long as I have downside protection, if I have downside protection, then I'm looking to still generate income on the own shares. I'm going to try to grab at least $1 or $2 every couple of days on this income method and trying to grab, let's say from $628. The next time I roll this, I make, $750. The next time I roll it, I make close to $900. Then I make over $1,000. So that's the plan, is to try to income my way through this, maybe 3-4 rolls and grab $1,000 and then do it again, do it again, do it again. Okay. So that's what's going on with this SPY income collar update. I posted this here in my Telegram channel. So if I did nothing today, my SPY shares get called away for $470 profit. I'm rolling the SPY collar out to the end of the week, keeping the strike the same. It's a 583 call sell, okay, for a covered call, and then a 570 put for protection. Now, the put side is way out of the money. It's now a very inexpensive debit at like 35 cents. But if we have a big down move this week, hopefully by like maybe tomorrow or Thursday, there's a chance that will increase in value a little bit, and I can take some profit, lower my cost basis, but I'll still keep the 583 call. If price stays above it, cool. Because right now the SPY, I mean, we're trading SPY is at what, 590. So I mean, the SPY is going to have to drop $7 for me to let the SPY be under my covered call. And if that happens, let's just go to the SPY for a second. If we drop from, let's say, current price, we drop down to 583, we'd have to drop about a 1.5%. We'd have to come back and fill today's gap, which is obviously very possible, right? But more importantly for me today in this close is trying to get price back below 59.10, keeping a close eye on this one for the rest of the morning, evening, afternoon, whatever. Here is the 27th for today on SPX. Excuse me. So here are my trades. I got a lot going on here. This is kind of a wild and crazy day. But like I said, my back was against the wall, watching price melt up all day today. I'm like, well, I can't just sit this thing out and watch this thing, give me more risk and more risk and more risk and let this risk go against me. So I put on a couple of hedge trades to see if I can walk away with at least protecting myself. And so I have on here's my combo here. So that trade is different. That's a swing trade. Daily profit play right now it's down 225. If this is less than, so if price on SPX today is less than 59.10, if we're less than 59.10, this trade is a winner for 90 cents. Okay, this bear call combo, I pulled in $1.75. If we're less than 59.20, then I can keep $1.75. The iron fly, this one is if we come down to 5,900. So if we're equal to 5,900, again in the next 42 minutes, then this trade offers up a big profit of $460. That's where we kind of max out. Okay, and then I have a hedge fly, which is unlikely going to be my trade today. That was if price went all the way up to, equal to 59.50, which I would think right now that's probably not going to be the case for the next 42 minutes. But that would be a 25-cent risk for basically a $2,000 reward if it was perfect, but that's unlikely. So anyway, this is what I have to watch. Ideally, I want price to close out today in the next 40 minutes less than 59.10. If we get less than 59.10, awesome. I'll have 90 cents here. I'll have $1.75 here. This trade, if we are close enough, I went 10 wide here. Yes. Nope, I went 5 wide. So this will be close. I might end up losing about $40 on this trade. And then this one, I'm going to lose about $25. So net result would be what, 265 minus 6. I mean, I still make $200 on the day. So if we're below 59.10, I'll still make $200 on the day. If we're below 59.10 and creeping into 5,900, it's possible that I can turn this into, a $400 winner plus the 175 plus the 90. That'd be a pretty sweet payout today. But, again, kind of fingers crossed to see what's going on. Tony's asking, why are the markets up today? Like I said, jokingly, there's no pullback, right? There's no pullback coming. No, it's just the stupid price action over the weekend, right? We had a holiday weekend, and what did we come into the first day after a holiday? Well, it was a complete flip-flop from what Trump said last week, which was 50% tariffs in the European Union. So what did he really do? He said 50% last week, and then he said, well, we're going to pause to allow for negotiation. Well, that clearly means that it's not a 50% tariff. That means that whoever steps in line, whoever wants to talk to the U.S., whoever wants to negotiate, is probably going to deal with something like a 10% tariff, 15% tariff, something along the lines of what we do with the UK, right? So it was just more wheeling and dealing, and the market was on that. That's really all I saw was like that was the big catalyst that drove the prices up today. Also, I look at my levels here. It's such thin volume today. I mean, this is just an absence of sellers. There's no sellers in the market. So when we started out trading this morning, and anybody that's in my daily profit play, we walked through this. We saw that here's your close on Friday. We had levels that were lighting up down to about 57.50. Well, when this went real time and this market went up, the only thing I saw was call side. So all of a sudden the sell side disappeared. It was all call side, and price did exactly that. It drifted right up to 5,900 and then some. Obviously not by much, by 59.25 being kind of the high of the day. Okay, so I mean that's the why. But I look at this as like you look at price action today, like it was a kind of silly day. It was a really silly day. This reminds me of like the most frustrating I've been with like just watching the markets do this all stinking day would have been like holiday trading in 2024. In fact, I can probably go back and find it. Let me go back and find my This would have been sometime in December. I know it was like one of our last trades of the year. It would have been right in here. So it would have been after the 18th. Probably this trade right here. Yeah, it was December 24th. Markets were still open half a day. I remember this. Let's zoom into the 24th. I'm going to go down to like a 5-minute chart. Let's go back to the 24th of December. And all it did was made me angry about holiday trading. So here was the day. I remember it because I mean, that day I did a very cheap, like, I'm going to walk away. The markets are just going to do their thing. This would have been Monday. Okay. We started. We started here. We spent the entire day grinding higher. Right. So it must have been two. Yeah. So this is the 23rd. Here's the 24th. It was this day. It was Tuesday, the 24th. So Christmas Eve, this was the day. Because what did we do? Well, we had a close here on Monday. We gapped open, and it spent the entire day just going and going and going and going and going and closing at the highs. That's what it did for the day. And I remember that because I ended up taking a full loss on an iron condor, and it was stupid, right? And then we chopped around. We ended up forming like a couple days later after the holidays. Boom, right back down where we started. Like this inefficiency was filled. What might nothing. I mean, if you're looking to drop anything, it's like just create a trade, man. I mean, I'm looking at generating income on SPY. I'm looking at rolling my covered calls on income strategies with Tesla, MicroStrategy, IWM. Like all those trades are this week. They all expire on Friday the 30th. So I'm just in some trades. I mean, if I was going to drop $1,000 right now, I would wait till tomorrow and do a fresh setup. I think doing it now in the last 40 minutes of the day is stupid. Like, don't force a trade, you know. But I can find trades. I mean, that's the whole point of this. This is my pinch point scanner. I can find trades. Here's 10,000 stocks that I've got 7 that are actionable. I like DNB. I like these top volume stocks here. It might be 12 or 13 in this area. So, I mean, taking a look at a Walmart, Starbucks, Verizon, Target, Chipotle. Even a firm. It's not quite 1 million shares, but it's a household name. Palo Alto, that's pretty volatile as well. So, I mean, I'd like to see all these stocks work out. So these are trades, but I think just asking somebody like, "What are you going to drop?" Nothing, man. Go find a good trade. This is how I find good trades. All right, so let's see how this plays out. Zoom back into the 5-minute chart. Chart alarms are set. Let's see if we get back down to 59.10 by the end of the day. Hopefully that is the play. I'd love it to be the play, actually. If we get back down to 59.10, I'm going to check that daily profit play to see if that is break even or better. I might just close that one out and then let the 59.20 be the $1.75. If we come closer to my 5900 zone, that's a iron fly that could pay me $4.60. CRWV new highs today. Okay. I mean, I'm sure there's plenty of stocks that are hitting all-time highs right now or hitting new highs. I'm just I'm curious, like everyone else. Like Tesla had a nice little pop up here today. Is this a pop up to the? And look, seasonality wise, there could be a push up into the end of May, and then June is typically a little bit of a pullback. So if I went into take a look at seasonality, okay, I'll show you a couple things here. Just based on the last 10 years, this is what the market typically looks like. So if I go seasonality, and we'll go monthly. Okay, let's go to the S&P. There we go. So here's S&P over the last 10 years versus this year. So, not really fitting the perfect mold of seasonality, but usually May, June, July are a pretty bullish window. This year was kind of weird, right? We had a down month in February. We had a horrible month in March. But remember, this wasn't from all-time highs. This is from the market starting out a little bit lower. When the market started out the year, it was up around 4%. Okay, that was like the run for the year, and then we dropped. That peak to trough was about 21% from the highs. And then we've melted up. I mean, April was just this massive candle that looks like this. The month of April looked like that. A tiny little close lower, but April was, look at how this thing finished. April was down only 1%, and at one point was down double digits. So that's a really crazy comeback for the month of April. May is off to a pretty strong start, up 3% when the average is 1.24. So May's been a pretty strong turnaround off of the momentum off that April pivot, which would be April 9th is the big pivot, right? So seasonality wise, May and June and July are typically pretty solid. August, September, we usually see a bit of a top or a pullback. September to October are usually the least performing months in the season, and then November, December, the market tends to finish on a high note. So what does this mean for right now? I mean, I'm curious if June's going to be a bit of a pullback and a reality check. We're coming into this July window, and what happens in July? July is going to be this, 90-day pause is up. Are we going to have another kick down the road? Like how many countries have lined up to do deals with the U.S. as far as this trade war is concerned and tariffs concerned? I don't know. We're going to have, we'll have core PCE. We'll have another round of inflation data. We'll have more news out of the U.S. jobs numbers. So I don't really see the news being terribly damaging. But if this whole idea of like tariffs and there's no real plan after 90 days, I don't know if the market takes that as a good or bad thing. I mean, is this whole thing just a big joke where it started off with the right intentions of we're going to fix this deficit? Well, it's not going to happen. We're now going to pass this big beautiful trade bill, add to the deficit, definitely help the those that have versus have nots. This is going to be a tax cut for the wealthy, and it's just the same old song and dance, but it's spun to be this pro Main Street trying to help people when it's really not. Anyway, we'll see. But it's been a hell of a comeback since April. We have melted up, to the degree of like it's kind of silly right now. I mean, this I was actually measuring this today. I'm like, if we get to all-time highs, this might be one of the fastest recoveries the market has seen like since COVID, right? That'd be a 27% move off the April 7 lows all the way back up to the highs. So is it possible that we get to all-time highs before we pull back? Look, I was asking before, right? I was asking traders when we were about here. Are we going to hit the lows or retest the lows or try to get to the highs? And I had a majority of traders and myself thinking that we're going down to not get to the lows, but retest in some capacity, right? Like a try. It tried, but this was not. That's not a low retest. That's a swing. There's a low to high. There's a pullback. There's a swing. That's a swing trade. When we're sitting in the middle, I ask the same question. All right, from here, are we going to retest the highs? We're going to try to retest some lows and pullback. I was in the same camp. I'm thinking we're going to have a pullback. Will we blow through the top here again with that U.S. and China trade agreement for 90-day pause? What price do? We pulled back a little bit after finding out that Trump's going to do a 50% tariff on the Eurozone, and that was a little decline last week, and here we are right back up to the highs. Like we're right here. It's like, look, even if the market were to pull back, this doesn't really change anything for me. So now if we pull back, I want to see a buy opportunity here. I want to see a buy opportunity here. To me, this is a chance to buy a dip, and still position for a run to the all-time highs. The most frustrating thing would be a run to the all-time highs after leaving all these gaps, and this market does what? Does it pause and then roll over on itself, or does it keep going up higher? I don't know, right? I mean, we've got to get a tax bill passed. Like, this isn't a good thing outside of it's good for equities, but I don't know if it's going to force the Fed to do something like cut rates earlier, cut rates later. Pause. I mean, I don't know. In this whole 90-day pause window, it's like it's just whatever Trump wants to do, and we're just sitting here wondering, like, is this market going to melt up? It doesn't even care anymore. Doesn't matter what the Fed does, and there's no recession because job numbers are solid. I mean, maybe, but we're still talking about yields, and this is still one thing that's interesting. It's like yields are coming down, which is probably a good thing, right? They're not anywhere near Liberation Day breakout levels, so this is still not a good thing. 20-year yield, not a good thing. We're still way above the Liberation Day levels. The 30-year yield, same thing, way above the Liberation Day levels. But if yields come down a little bit, that gives a chance to buy some dips on bonds, which is what we're seeing, right? So my TLT exposure, I've been riding some of this out. I've got a break even around I think 86 is my break even on TLT. I'm looking to get it called away at 89. That's going out to this week. So I'm trying to eliminate some of the exposure I have on bonds, even though it's a good trade overall. It's like I'm not going to sit here and pretend like I want to be long bonds because I don't. I want to be out of bonds for profit, which means I'm calculating my break evens on my diagonal spread. I'm getting that buy power back, and if I get it called away 89, so be it. Okay. All right. Earnings tomorrow, aftermarket. Yes, NVIDIA has earnings tomorrow. Just to throw that out there, let's actually spend, we've got about 30 more minutes. So I'm still watching. We're at 59.12 right now. Let me go. Daily profit plays down 165. My bear calls combo is break even. What's going to be wild and crazy about this one is this is probably a trade. Let me build this out really quickly. So I'm going to build this out on SPX. Okay, so I'm doing in bear call spread. So I'm going to add a buy call, sell call, sell call. 59.20. This is today's expiration, which is the 27th. Okay, so I did the 20 and 25 and the 30 and 35. So here is my current position on the bear call spread. I pulled in $1.75 on the trade earlier. Oops. So I pulled in $1.75. We'll go back to current price or current time, which is 3:32 p.m. So this is what it looks like right now. Okay. So right now we're trading at 59.12. So if I zoom in, can I make this a little bit larger? That's a little bit better. Okay. So 59.12. I should be starting to see some profit on this thing. Right now it is, 333. We're at 59.12. I should see $160 of profit on this thing. Right now I'm showing about $20 in the hole. What the heck? Okay. So I'll keep watching this one, but watching this. This hedge fly is probably going to be a loss. That's fine, but I'm watching this for profit, watching this for profit. I'm going to keep a close eye on this one as we continue the session. Lee says, do you think that bonds are the ultimate safe? No. I think that gold is the ultimate safe haven. You could go back over 50 years, never take a trade in bonds, and do a 60-40 portfolio with 60% equities, 40% bonds, and it would actually outperform. 60-40 portfolio that everyone said was tried and true. Look, it is the laziest portfolio for a financial advisor. To put somebody in allocating them to 60% equities, call it the S&P. 40% bonds, call it the 20-year TLT. And you do a 60-40 split. It has underperformed the index by a long shot. Obviously, it's supposed to lower volatility. You get some yield, obviously, in the bond side of things, but my point is it's underperformed. If you had a 60-40 split with equities and gold, it's outperformed by a lot. So I would rather have that be the safe haven, right? That truly to me is a better safe haven is being, long gold, long equities. That's fine. So anyway, that's my plan. Okay, I want to price out some NVIDIA earnings, and I'll go back and let's review our SPX positions. We're at 59.14. I needed to stay below 59.20 today. That's where most of my risk is at, so hopefully it stays below that. I'd love to see this thing get back down to 59.10 or lower. Hopefully it does. Don't retest the highs. Don't be a turd. The last 25 minutes, don't be a turd. Just drop. Okay, let's price out. I did this earlier today on NVIDIA. I know we're expecting to see about an 8% move, which is like a $10 to $11 move. So average move on NVIDIA with earnings is about 8%. I've got a lot in the teens here, but you have also, this would go back to 2023, had some single digit moves. The last year, earnings have been a little bit more exciting around NVIDIA, getting some double digit moves. So on a conservative basis, I could say we expect to see about 11% or an 8% move. Market makers this week on NVIDIA. Let's go plus minus. We're looking at about a $9 move. I'm looking at 8%. It's 8.11 times 134.91. So I'm looking at about an $11 move. Okay. Part of me wants to take, and actually I might do this for my, trying to think. I might do this for my Newsbreakers class if I did a call fly. Let me move this out here. Let's say that 134, I'm expecting about an $11 move. If I sold that, what would this be if it was at the money? About 50 cents. So if I go to the expected move and this trades at the money, If I get this trade filled for 50 cents credit, I'm going to take this trade. This has a profit trap in here. So I'm going to take this trade pending at 50 cents. This is going to be a way I'm pricing in the earnings play in NVIDIA. Actually, the probability getting filled is probably slim. Let me see. Maybe there's one other way to trade this. If I do a call Condor, I could possibly turn this trade into a winner. That trade for 80 cents. That's just not enough premium. Yeah, I think I'll try this trade. I'll try the butterfly spread. This will be a broken wing. If I can pin this thing, I'll go one strike higher than the $11 move that I'm anticipating. So about a 146. This is aftermarket tomorrow. Let's see if this thing can fill for 50 cents. It's defined risk. The most I can lose is 90 bucks on it. If I get filled for 50 cents, have a chance to make 50 cents. I can profit trap for almost $1. Let me go out one more strike and make this a little bit different. So that'd be $200 winner. And I'll just keep it simple. So that's fine. I'm going to try to get this trade filled for 50 cents. Okay. So this is similar to what we took on. This is all call trades. This is similar to what I did on URBN last week. If you remember, if you're in my newsbreaker service, we did this on URBN, and it had a chance the day of expiration. We had a chance to make about 50 bucks on the trade, which was about a 50% profit. I ended up closing out. It was just timing on the trade. Like an hour later, it was not timed correctly. Excuse me. And I ended up losing 5 cents. So it wasn't a huge loss, but price offered up, I think, twice in the final day of expiration, offered up about a 50% winner. I just closed it out for a small loss. So I'm going to take this trade. This is pending order. I'm going to put this out for my newsbreakers here. Give me a second. This will be newsbreakers. New trade. NVIDIA will be a 5:30 expiration. Buy the 145 call. Sell the 146 call. And then buy the 148 call. So 50 cents credit. This is a broken wing butterfly at the expected move based on NVIDIA earnings history. So this is about a max risk, about 90 bucks. Max profit would be, I want to say, oops, not replace, similar. 150 would be my max profit. If filled, likely profit is the 50 cents credit. There. Okay, so here's the move. You know, we hit 8%. The last year or so, we've had double digits. So it's possible that we have like a big move. The plus minus here from the broker is not that great. I mean, we're looking at about a $9 move, which is percentage-wise pretty low. So 9 divided by 134, you're looking at about a 6.6% expected move from the broker, which I think is kind of interesting. Like that's low compared to the averages. But the other way to play this would be, okay, so we're trading at 135, buy the 136 and sell the 146, buy the 134 and sell the 124. Okay, if I went out, good Lord, man. So I'd have to pay $6.30 to make $10. Ugh, that's just a lot of premium. I wouldn't even take that trade with the 3-day expiration. I would go out another week and see what does this price out to be. So 136 by 146, 134 by 124. So, I mean, still, it's like I'm paying like 2/3 of the trade, which is kind of frustrating. So I don't love that trade. I'm going to take the one that I did, broken wing. It's inexpensive. If it gets filled, I like the trade, and we'll see if we can match it up. Okay. All right, real quick, just spot check in levels. I'd love to see price get back down below this second line here. So if we get back down below that line, that's a good thing. Come on, just stay below 59.20, please. A little bit lower would be nice. I mean, this support level, come on, I'm just like grasping at straws here, frustrated by what today has done. This is a silly little day. Market's up over 2%. The expected move is like 1.3%. So what a stupid day where market makers got it very wrong. Market's up 2.09% with the VIX explaining that it should be somewhere around like 1.2, 1.3%. So way off today. So, I mean, there's your market inefficiency, right? Market makers say this, broker says another thing, market actually does this. Kind of a silly day. But we're not done. Let's see where we close here in 18 minutes. 22% in AMC. I don't know, man. Was there earnings? Are they announcing they're going to buy crypto? Record Memorial Day weekend. Oh, what? Mission. I guess you can thank Tom Cruise. There you go. Mission Impossible this weekend and Lilo and Stitch. AMC had one of the a record-breaking weekend. There you go. 7 million attendees and strong ticket sales. I mean, here's what I would say. Look at the lows at $2.52. It's a squeeze trade to me. You know, I mean, like the why is after the fact, but it's like if you bought this thing at a strong technical level, like $3 or $2.50, it's now up. Now, don't get all excited about this. Like percentage wise, yeah, it's up 20 something percent. But I mean, as far as, hey, I've got 100 shares of this. Well, my 100 shares is up a couple bucks, right? If I bought this thing at a good price, it's up 46%. Most of that's all because of today. Still doesn't mean this thing is going to just rocket to the upside. It's just this is what the stock market always does. It makes you feel like you're never going to find a trade, right? Or you're always you're looking for needles, and all of a sudden it's like, oh, geez, AMC, how'd it go up? How'd I miss that trade? Because you're never looking for it. You know, this is exactly why I'm using this. I don't need to be manually searching for my needles anymore when they're right here. Not only are they right here, but they're giving me an opportunity to take a trade with good technicals. So that makes my life a lot easier. You know, like if you read about this in your financial newsletters and you see like AMC up, it's like, who cares? This stock is dead capital and has been for a while. This thing hasn't been anything good for years. This was, I mean, you go back to GameStop in 2021, right? 2021 was GameStop, right? All the drama, all the crazy stuff with Robinhood, that was all 2021. AMC was like the next meme stock. You had GameStop, you had AMC, then you had like Bed Bath and Beyond, you had like, Hertz Rent-A-Car. It's like J.C. Penney, like all these stocks are just like the meme stocks, Wall Street bets. This thing is down 98%. Don't tell me you're excited or interested about trading this. Okay. Sandy, be asking about newsbreakers. It'll be posted it'll be in one-click trading. Yep, it'll be in one-click trading. Okay, THG. Let's go THG. Interesting. So I'm going to do this for my pinch point. Like I said, I'm talking about this more on Wednesday at 1 p.m. Eastern time. So here's what I'll do. I'm going to post a link. I'll do this in my Telegram. So this will be the sequence. Here's my Telegram right here. So inside the chat, here is Chris Pulver, Telegram. Okay, so you can join the Telegram channel. Now, here's what I'm going to say. If you're in my Telegram channel, here's a bonus watch list for this week. powered by my pinch point scanner. Okay, so I'm going to type these up and send this message out. So I've got DJT, AMCR, ASTS, WMT, Starbucks, Verizon, TGT, Chipotle, which is CMG, WMB, KVUE, and VTRS. And then on my optimum scan, it's DNB. That one has enough volume to go after. So DNB and VKTX. So here's what I'm looking at. Okay. I took 10,000 stocks and filter them down to now about 14 or 15 that I would say I'm willing to look at, I'm willing to price in, I'm willing to see if these are trade worthy. Not that hard. So my life gets a lot easier when I can find actionable trade ideas over the next like 30 to 60 days. Okay, how do you play them in 0DT? I'm not trading these 0DT. Yeah, they're stocks. You don't have 0DT in stocks. You have 0DT in indexes. So at the very least, you'd have to go out to a weekly expiration. I'm likely going to go out to like the next monthly. I'd probably go out like 30 days, 30 to 60 days on some of these trades. These are swing trades for me. I'm going to give these time to move. So look, I've got the whole thing, pinch point scanner, my whole strategy guide. So it's already ready to rock and roll for this week. And looking forward to getting that in everyone's hands starting this week. Okay. So final minutes here. We got about 12 minutes left. Can we get this below 59.10? Check really quickly here. This is still down 180. This one's up 76. Come on. We need to get back below 59.10. 59.10. Come on, 59.10. You're only 2 points away. Let's go. Get back down to 59 today. That would be a very pleasant surprise for the end of the day, but I would certainly take it in a heartbeat if I can get it there. Okay, all right, we'll see. We got about 11 minutes for cash settled and the close on SPX. We'll see where this position's going. Hopefully we're going to crack this low and get down below 59.10, hit that chart alarm, then I'll be watching. My trade here, we're trading around 59.12 again. It is 349 right now. There you go. So we're trading it. I mean, this is showing that I should be up most of the profit. But again, this shows a credit of $3. I got a credit earlier today of $175. So that's probably where the difference is if I could update this credit. But hopefully we're back down below 59.10, and this is going to look a little bit better for a profit. There's my range trade. So obviously I don't want price to get above 59.20 because that's where my risk is at. My risk is going to be 5921.75. That's where my risk is. That's break even, so anything above that's going to be risk. What the hell just happened there? Okay, so my bear call spread just closed out for 75 cents. So that is $100 on that trade. All right, I guess I forgot to take that one off. Well, dadgummit. I got to keep an eye on this DPP for here. So I just closed out. Update. It is 3:50 p.m. Eastern Time. Bear call spread combo. $1.75 credit was the entry. Okay, and now I'm watching the DPP. That max risk is around 410. If price is above 59.10, that's my max risk. This iron fly might lose a couple of bucks here. But most of the risk was above 59.20. I mean, I'd like to see this thing fall lower than 59.10 by the end of the day. That would be a nice little pleasant surprise to pull this thing in for a win. So I'll keep an eye on it. Come on, 59.10. Tap that chart alarm, would you? All right, things are getting a little bit more exciting here. There's kind of that end of day nonsense where prices are moving and jumping around. I'd love to see price fading a little bit off this intraday move. If it's any way possible that you go, from this opening candle up around 59.24 highs, it's like pull back 23%, pull back 30%, pull back anywhere before the day is closed. So hopefully we would just push a little bit lower. All right, we'll see how this thing settles. Roundtable tomorrow at 1 p.m. Yep, 1 p.m. tomorrow. Roundtable is going to be Wednesday, 1 p.m. Eastern time. I can find a link for that right here. Just give me a second. There it is. Roundtable registration link. There you go. And this will be in the Telegram channel again tomorrow, so you can check it out. All right. Can we settle below 59.10 today? That would be nice if we could. All right, so I put in a pending order on NVIDIA. That's filled for newsbreakers. Daily profit play still managing all the way to the close today with a pretty silly move. I mean, based on the VIX, it should have been about a 1.21% move. That was blown through pretty quickly. Once we got to, well, I take that back. I mean, it should have been about 1.21% based on the close last week. So this move has gone way beyond. We're up over 2% from the close on Friday and back up here. So we'll see how this settles in the next 7 minutes. I'm hoping that we settle just a little bit lower. Come on. I get really lucky if we settle back in at 5,900 in these final minutes. So this trade closed. Let me build this one out really quickly for my iron fly. I think it's a 5,900. So my call's at 5,900, my put's at 59. Okay, and then add a put. So I've got a sell put and a buy put, 5,900 and 95. Dadgummit, price is going back up. It's up to 59.15. You piece of crap. So anyway, that was my, this is my potential iron fly. So price would have to drop down. I mean, I'm taking a super small trade. It's just small risk. What the hell happened to my price? There we go. All right, 5 minutes for the close. So if price miraculously drops, 10 points for me, there's a chance I can pull some profit here with the cash settle. Otherwise, I'm taking a small risk of about 40 bucks. John, what are you saying there? I mean, we were at 59.10 right here. We poked above it, we poked below it, but not enough to really see the profit that I wanted on the daily profit play. So, I mean, right now it's like I'm potentially going to lose on the daily profit play if we don't get back to 59.10. What I did is on this trade, I kept the trade. So this is $1.75, and I closed it down for 75 cents. So that take profit got hit for 100 bucks. Okay, if this one loses, I'm losing 410 on this trade. So net, I'd be down about 300 bucks on the day, which could be worse. I mean, obviously, it could be a lot worse. Like above 59.20, I was risking about $1,800 here. So, I mean, we'll see. There's still 4 magical minutes left. If we come down to 59.10, eureka. If we don't, I mean, technically, I've got a break even of 59.10 .90. That's my break even if somehow this thing cash settles. But right now it's not. I mean, we'd have to have like a very quick, aggressive 4-minute move to the downside. But I'm out of that trade, so there's no risk above 59.20. Now it's just I need this thing to get back down to 59.10. And this iron fly is likely going to be worthless as well. So that was that trade. And then a butterfly up here to hedge, that's pretty much worthless as well. So we'll see. Got 3 minutes left. Not holding my breath, but like I said, majority of the risk for me, if I lose $300 today, I can live the trade another day, considering, this was an extremely directional day. I mean, I'm not happy about how daily profit play went, but if I'm walking away with a $300 loss, it's not the end of the world. That's easy to make up. And then the rest of the day, I'm up about 23 grand and hitting some fresh highs in the portfolio for the year. So, it has a silver lining where I'm still enjoying this bit of melt up. It's in income trades and letting price do its thing. All right, last couple of minutes here. We'll keep an eye on this. I'll set I've got the chart alarm at 59.10. If it doesn't hit there, that's fine. I will be a little happier, obviously, if I'm watching price go above it. Like 59.20 would not have been a fun trade. That would have been, most of my risk is like $1,800 risk on that trade. Euro dollar, I don't really have anything on currencies right now. I think you got to watch the dollar pretty closely. The Japanese yen, I think those are going to be your two big baskets this year. Today, this is currency strength. Dollar's making a bit of a comeback. I said the dollar's probably going to pull back. I mean, euro dollar to me looks like this trade. Euro dollar to me looks like a trade that does something along these lines. So we have a Lewis, that trade. So the rule of 16 for the VIX is this: you take the VIX and you divide by 16, and that gives you roughly your percentage move for the day, give or take. So when we started today at the VIX, it was 20. If you divide 20 by 16, okay, 20 by 16, you're looking at about a 1.25% move today in the VIX. Well, you look at yesterday's or Friday's close to today's open and move, you had about a 2.09% move. So that's way above what was expected. But also something tells me that this move is not sustainable, because you don't see a lot of times when price does this that it just keeps going. Like a move like this is very inefficient, very one-sided. I would say that this level probably got tested from the surprise news announcement. That would have been, was that the 50% tariff announcement last week? It was, right? Was that the failed bond auction or the tariff announcement? I don't know. It's all a blur, honestly. But we have inefficiency here. We have inefficiency here. Price works its way back up and it finds it. But that's how you calculate roughly what you're expected to see on a daily basis, is that take your VIX divided by 16. All right, cash settled 59. See what the broker shows. I mean, again, had I done nothing, this trade would be a loser too. So at least I got $100 out of that trade. Looks like I'm taking a loss of about 410 on the other one. So my net's about $300 in the hole today. There's my $400 loss. There's my combo trade that would have been a loss, but I closed it out for $100 winner. That trade's a small loss, $40. That one will settle at $40. So anyway, survived the day. I still made $110 net on the day, which is fine. Overall portfolio still fine, but like I said, kind of a silly day. So what I'm looking at here is this is settle at 521.55. If I didn't do anything on my bear call spread, I had a 5920 bear call spread, I'd be upside down $155. I pulled in 175. So technically that would be a winner, but I'd only walk away with about $25 instead of the $100 that I did take. So that trade did close out for $100. So anyway, overall, like I said, survived the day, still made some net profit. It's fine. It was ugly. And this was a very silly day. Like, you don't see this happen very often intraday. I mean, you look at like good move. It's like, it's all just trading. Like, you never know, but markets were clearly excited post-holiday to do something silly, and they did. Anyway, just look, don't be surprised. Don't be surprised if with NVIDIA earnings tomorrow that maybe the market's trying everything it can to retest these highs, but I would see possibly post-NVIDIA that this market ends up at least coming back to fill some gaps. Um, and look, I told traders today in my waterfall income that I've got to be patient. I mean, I can't look at a chart like this on a weekly time frame and see this is like, I don't see this as a sustainable rally. You know, I mean, I'm not sitting here trying to call the top and be bearish. I'm just saying like this area right here is a lot of indecision. And if we just dance around between these levels, it's just this open space that could go, a few percent up or down. Like this move is around a 3% range. So we could go 3% down and it doesn't really change anything in the bigger context of the market. A 3% pullback is nothing, right? A 5% pullback is nothing. Like this is still, to me, very good bullish posture. So 3% to 5% to maybe a little bit deeper, I'm still hoping that we have a pullback so I can position for it. Make sense? So I don't know. I mean, look, if the market goes up, fine. I mean, I'm still going to make money. I'm just going to not be happy about it. Just because I'm not as aggressive on this positioning. The most aggressive that I was during all the drama. Like I was super aggressive down here, lots of profit in here, and then I protected it. Like once it was in this point, I stopped allocating a bunch of new positions. I resorted to mostly income trading, which is own some shares, sell some covered calls, lower my cost basis, roll some covered calls, and just let income be my guide. Like I'm not super bullish here. I want to pull back first. I hope we get one, you know? So anyway, we'll see. But it's just it's one day, it's one trade. I think risk management's the biggest thing. Let me do this before we go. I'm gonna give this out as a little bonus trade. I know I can't take it today, but I'm gonna do something for the roundtable tomorrow. You're gonna see this more. So I would say if you want to join me in the roundtable, here's a little bonus watch list. I'm gonna look at pricing something out. So I'm gonna look at a couple of different stocks. I'm gonna look at between Walmart, Starbucks, Verizon, this I think Macy's, Target, and Chipotle. Okay, so I'm going to look at those really quickly. So Walmart trading at $98. Okay, so for Walmart here in the next probably 30 to 60 days, either we're coming back to the highs, I would think for maybe a $7 or $8 move, or we're falling back down and to retest some areas. So this would be my high, this would be my low. Can I look at a trade on Walmart that gives me something? We already have earnings in this one, so it's not an earnings play. Earnings isn't until July. At this point, earnings is in August. Okay, so let me price this thing out. So Walmart. Look at these stocks and see if I can find a technical favorite. So Walmart, that's not bad. Starbucks. Starbucks is probably okay. Again, looking for some direction. Not bad. Maybe difficult to get to the highs, but could certainly retest the lows. Earnings on Starbucks is out into August. So again, not really an earnings play. It's just more what's price going to do. We going up, we going down. Okay, so if we get back down to these lows, that's a $12 move. I think I can make some money there. I like that one. Verizon. This one looks like it's ready to move. I think I already have some exposure on Verizon. That was a profitable find. All right, so Verizon is kind of right in the middle, right? We're in the middle. So is Verizon going to be put in the low, starting to move up higher? Are we coming back down to revisit lows in the next like 30 to 60 days? The nice thing is we're in the middle. So I think this is primed to make a move. Let me go out. I think I'm going to take a look at Verizon. I think technically that makes a lot of sense. I'll go TGT, which I'd rather just buy TGT in all honesty. But the stock is beat up enough from I might just have to price it out. So we're trading at 96. I've got a ratio spread already. CMG is Chipotle. This one to me probably looks good for a buy. After, setting in a low, it's like, are we going to start trending higher? I think this one's in a pretty good position to, try to grind out a correction, work its way back up. All right. So I think as long as the option prices are looking good for Verizon. So how did I find it? Well, I use my pinch point scanner. This is in my get set filter, and I've got good volume on this one. It is number 1, 2, 3, 4, 5, 6 on my list. 1.7 million average volume. We got a breakup opportunity, so I'm looking for something to go up. but I'm going to price it out. So I'm going to go VZ. So in about 30 seconds, I can find a handful of trades that I'm interested in, and then I dive into my options chain. I'll figure out whether I want to take the trade, and I can price it out. Okay, that's what I'm going to be talking about tomorrow for my roundtable. Tomorrow at 1 p.m. All right, so we're trading around 43. The broker is anticipating for Verizon, if we went out about 45 days, or might as well go out to the monthly option in July. Okay, are we going higher or lower by the monthly expiration? Let's go VZ. Okay, so I'm going to go out to the 52-day expiration, and if I buy a 44, sell a 4, or buy a 44, buy a 43, brokers only anticipating about a $2 to $3 move, which is crazy low volatility. I'd like to think that price can do something better than that. So let me see if I can do a 47. Let's go 48. It's not really going to take off a lot from this trade, but that does give me $4 of upside. And we'll go 39 here. Okay. So I have a trade that if I trade it both directions, if I get one side right directionally, I can make over $4. So I make $4 credit on the winning side, and my debit is 185. So the way this trade would work is if I'm right, so 214 divided by 186, I'm going after about 115% max return on risk, which isn't bad. I think this stock is postured and primed to move somewhere. This is a $6 move. This is a $4 to $5 move. I only need price to move $1.86. Well, the nice thing is here is I need price to move $1.86, and the broker says that price is likely going to go at least $2.34. So if we just have some semblance of direction one way or the other, I can turn this into a $50 winner, which $50 out of a $1.86 is not a bad return. That's still about just under a third. So it's about a 30% win. If I get it right where I get price going the direction I want, I can get this over, so anywhere between about a 30% winner upwards of like 115% winner. Not a bad trade. So Verizon's going to make the cut. I'm going to post this trade for my pinch point scanner tomorrow. That'll be a bonus trade if you're in that round table. You got a little sneak peek of it here, but hopefully this will be one of many. We're going to take lots of trades together. I like how this one prices out. I think it's poised to make a move. That's the whole point of my pinch point scanner, is to find prices that are ready to move. Okay, and the nice thing is even this noise going down to 37.50 is enough to cover the cost of my trade. Going up to about 47.50 is enough to cover the cost of my trade and give me some profit. Okay, so if I space it out this way, if I bought the 44 and sold the 48, that'd be a bull call spread. And if I bought the 43 and 39, that's a bear put spread. That combination is a reverse iron condor. So I'm going a little bit further. Look, in my pinch point scanner, here's my neutral, reverse iron condor. Okay, all this is combining a bull call spread and a bear put spread. That's all I'm doing. So everyone gets all confused, like, oh, these spreads are so difficult, Chris, I can't follow along. It's just a simple trade. It's a bull call spread combined with a bear put spread. If price goes one way or the other, I can win. I can lose one side, win one side, and make money on the trade. That's all I need Verizon to do. Okay? So, excuse me. I'm going to price this trade out. Looks like I got about $1.80 to $1.90 debit for this trade. And I'll look to take this trade tomorrow. So my pinch point scanner and my alert service, I'm going to post this trade for tomorrow. And I'll price in the other ones. I've got a whole watch list here that I'm going to continue to price out. So these will all be noteworthy. And of this list, maybe I take 5 of them because I really like how they price them out. And that is, 30 seconds to find great trades, and then a couple extra minutes just to dive down a little bit deeper, a little bit of top down, and make sure that it prices out the right way to make sure it's a fair trade. Okay, good stuff. All right, I'll let you go for today. 90 cents on that one. That closed out for 10, and then the other trade was a $1.75. Closed that one out for 75 cents. All right, so I'm just updating my my tracker for daily profit play this morning. It was around a 58, about 5,900 center price in that trade. All right, so a small loss there. So net 310 in the day. But all right, VZ's on the list for tomorrow. Okay, I'm gonna let you go. I'm gonna get back to some of these videos I was trying to finish up, and look forward to seeing you all tomorrow in class and for the roundtable at 1 p.m. Eastern time. So Telegram link is in. I'll post it one more time if you're joining. So there's my Telegram. Chris Pulver Telegram. There's the link, and then 1 p.m. roundtable, Wednesday, May 28th. Okay, sounds good. All right, thanks everybody. I'll see you tomorrow. Bye.